Hey everyone, and welcome back to Capital Markets Quickie. Today is Tuesday, October 8th. I'm your host, Endrit Sella, and here's what's happening in the markets. Before we get started, just a quick reminder. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. They're your go-to provider for personalized investment solutions and mutual funds. For more details, visit amf-capital.de. So, let's dive right in. The stock market yesterday took a bit of a hit as the 10-year Treasury yield jumped past 4% for the first time since August. That's significant because higher yields can make stocks less attractive compared to bonds, and it definitely rattled investors. The Dow fell about 90 basis points, dropping around 400 points after hitting a fresh record high just last week. The Standard & Poor's 500 shed almost 1%, while the tech-heavy Nasdaq dropped nearly 1.2%. Not exactly the start to the week we were hoping for. In the afternoon, things got a bit more interesting, or concerning depending on how you look at it. Stocks moved lower after a judge ordered Alphabet to open up its Google Play App Store to more competition. This is a big deal for the tech sector. It shakes up the App Store ecosystem and could have long-term implications for how these platforms operate. That news definitely put pressure on tech stocks across the board. Interestingly, Nvidia was the only gainer among the major tech names. Kinda makes you wonder what's driving their resilience amidst all this, right? Meanwhile, oil futures jumped more than 3.5% yesterday, extending their biggest weekly gains in over a year. Traders are pricing in potential supply disruptions due to geopolitical tensions in the Middle East. With the situation between Israel and Iran escalating, there's a lot of uncertainty about oil supply, which is pushing prices up. Higher oil prices can trickle down to increased costs for businesses and consumers alike, so that's something we'll need to keep an eye on. Oh, and let's not forget about Hurricane Milton, which was upgraded to a Category 5 storm off the Gulf of Mexico. That's also fueling higher crude prices as it threatens oil production facilities in the region. Plus, insurance stocks took a hit as the storm heads toward the coast of Florida. It's a developing situation that could have economic impacts beyond just the energy sector. Now, shifting gears to the Federal Reserve. Hopes for a big rate cut have cooled off after a better-than-expected September jobs report eased concerns about weaknesses in the labor market. Last week, traders were betting on a 50-point rate cut in November, but now that seems unlikely. The CME FedWatch tool shows that about 88% of traders are expecting a 25-point cut instead. So, it looks like the Fed might take a more measured approach in light of the strong jobs data. But those expectations are going to be tested later this week. We've got key consumer inflation data coming out on Thursday. Inflation is a critical factor in the Fed's decision-making process. If the numbers come in higher than expected, it could further diminish the chances of a larger rate cut. On the flip side, if inflation appears to be cooling, it might give the Fed more room to maneuver. And let's not overlook that earnings season is kicking off soon. Investors are gearing up to see how companies have performed amid all this economic uncertainty. With rising Treasury yields, fluctuating oil prices, and upcoming inflation data, there's a lot for the markets to digest. Companies' earnings reports will provide more insight into how they're navigating these challenges. So, to sum it up, we're facing a mix of factors putting pressure on stocks right now. The rise in Treasury yields is causing investors to reassess their positions, especially in interest-sensitive sectors like tech. Geopolitical tensions and natural disasters are adding layers of complexity to the market dynamics. And with key economic data on the horizon, volatility might be the name of the game for a bit. All right, that's all for today. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Sella, and I'll catch you tomorrow with more market updates. Stay informed, stay prepared, and have a great day.